Good morning, Bookmap community. My name is Charles. I come from a company called Piratetraders. We're focused on the ES, the NQ, and how it moves through the two-way auction process. Did you guys miss me while I was gone? Let me know in the chat if you're glad that I'm back. Looks like you had quite a rally while I was gone. Made some new all-time highs. That's exciting to see. I did call for that just before I left. But now the market's in balance. So when I say I am focused on the two-way auction process, what am I talking about? Hold on one second. I'll just get this streaming in the Bookmap as well. Little Discord action here. Okay, great. So the screen that you see on the left side, that is a market profile chart. The screen that you see on the right side, that is a Bookmap chart. That is order flow. And I use these two charts to basically give me insights as to what is happening on the market on a day-to-day basis. Okay, I'm looking at the auction process. Who's in charge? Buyers or sellers, or is there, sort of tug of war, two-sided trade taking place? Okay. I like to start every week with what Jim Dalton calls the top-down approach. The top-down approach is essentially just zooming out to give us perspective on what's happening on higher time frames. Okay, I'm a day trader, so I'm looking for opportunities that could happen over the next few minutes, next few hours. But by looking at what's been happening over the last few days, the last few weeks, the last few months, it can give me context to understand what's happening on those lower time frames. Now, I have been away from the market for an entire month. I never even looked at the charts. I completely ignored the market. So I am coming in fresh. This top-down approach will be very insightful for me. All right, so we're looking at the daily chart here for the ES. We'll go ahead and zoom out, and we'll take a look at the monthly to start. If there's going to be a new trend on the daily basis, we will likely first see it on the weekly. If there's going to be a new trend on the weekly basis, we will likely first see it on the monthly. So the best place to start is looking at the monthly chart to give us some context of what we're seeing. So if I look at the monthly chart, what do I see? Well, first and foremost, we had a massive trend on the monthly time frame that made new all-time highs. Okay, these were the previous all-time highs around 4,800. We broke out of that level, and that momentum just kept going for months. For another 2 months, it kept going. So then what happened? Well, we cooled off. We had a month where the market pulled back. That is what we call balance. That is the way for the market to pull back down, put the price, it's like putting the market on sale, making it cheap so that buyers might be incentivized to step in and do business. And what did they do? Ladies and gentlemen, on the monthly basis, they stepped in. So that is a sign that this momentum, we're talking bigger picture, we're talking over a period of months right now, is still in the market. The market still has momentum. On top of that, these 3-month period of time right here counts as a form of balance. Balance often leads to excess. Okay. The last time we had balance, it was right here. And look at all the excess. Look at all the momentum that we got after we broke out of that balance. So there's no reason in the world that can't keep going on a monthly basis. Okay. So that's on the monthly chart. Now let's zoom in on the weekly and see if there's any more insights. Okay, so on the weekly basis, we're looking at balance and excess exact same way. Balance in a pullback, excess, balance using time, excess, and then what do we have again over the second half of last month? More balance using time. Okay, so what does that mean? It means the market has been going sideways, trying to use just time to bring in buyers. People are so desperate to get long that they'll buy up at these new higher prices. Well, what other information is the market giving us right now? It is telling us that we are really having a hard time bringing in those buyers at the new all-time highs. We have wicks for the last 2 weeks at the all-time highs. So that tells us that maybe going sideways isn't enough. Maybe just spending time going sideways on a weekly basis isn't enough to create that next leg of momentum up. If that is the case, what is the market likely to need to do? To go on sale. right? It's likely to need to do a little pullback to give those discount shoppers a chance to get in. Okay, so we're seeing that on the weekly basis. And then I'm also going to zoom in and take a look at the daily basis. An exact same thing on the daily basis. Okay, on the daily basis, we have an unfilled gap below. Okay, and we see that the market has been going absolutely nowhere to the side. What else do we see that stands out to us about this weekly balance that we have, that we're looking at here on the daily basis? Friday's candle from last week completely engulfed the entire range of balance. So we've been playing tug of war. Can we go higher? Can we go lower? Can we go higher? Can we go lower? We've been playing tug of war, and on Friday we did that entire range. Okay, well, that's an important insight to carry forward. Doesn't tell us whether the market's going to go higher or lower today, but let's zoom into the market profile chart and see if there's any insights there. Well, now all of a sudden we have new information. When we zoom in and we look at Friday's range on the market profile chart, we have what we call a spike down. So the market tried to make new lows at the end of the day. So we started the day right here. The market tried to work its way up and make new all-time highs. It couldn't quite do it. It couldn't quite get to the new all-time highs. So there was not buyers willing to pay, 55.80 for the market. So what did the market do? It went on sale on Friday and pulled all the way back down to 55.10, trying to bring in those buyers there. Well, we are 15 minutes from the market open. And guess what I'm asking myself now? Where do we open in relation to this spike down? If we open inside the spike, so if we open anywhere below 55.30, that would be bearish and increase the odds that the market is going to head lower. If we open above it, it's still bearish because we left behind the spike, but it is not as bearish. So essentially moving into the day today, the way I feel is, if the market opens below the base of that spike, okay, if it opens between 55.10 and 55.30, the higher probability is that the market is going to head lower today. The way I will know whether that call is right or wrong is whether or not we hold this resistance we just created between 55.30 and we'll call it 55.37. That area right there has been resistance all weekend long. So if the market opens below 30, I'm bearish, assuming the market's going to go lower. It can come back up. It can test that resistance. If that resistance holds, my bearishness is confirmed, in which case I am very confident the market is going to head lower today. Okay. Now, if it opens in the spike and it pushes through that resistance, gets to the overnight high, well, then no big deal. We just get more bounce, more of what we had last week. Okay. But if it opens below that spike and that resistance holds, that is an extremely bearish signal. And I will be looking for momentum to the downside. If we open above the base of that spike down, if we open above 55.30, I will assume the highest probability is more sideways here today. So I'm looking over here at this balance area that the market has been in. And I'm asking myself, if the market did look below that balance on Friday, and it's not going to continue lower today, where is it likely to go? Probably to test the balance area high. That's what the market does. It tries to go higher. When it can't, it pulls back down. When it can't go lower, it goes back up, goes back down, goes back up. Okay? So if the market doesn't get momentum to the downside this morning, which is the highest probability in my mind, then it will likely head back up to test the resistance around 55, we'll call it 55.70. Okay, right in this area here. So that's pretty much my calls for the day. Now, the only thing that could really get me bullish, the only thing that could get me being like, this thing is going straight to the moon, is if we got above this node right here, we'll call it 55.63, and found support. What would be more likely in my mind, what the spike down on Friday tells us is a higher probability today, is even if we don't go lower, we're probably not going higher. So probably what would happen is we push up into here, run out of steam, and then come back down and keep going sideways. Okay. So the only thing that could get me bullish is if we found new buyers up there above 64 and we held it as support. Then I could be saying new all-time highs. But otherwise, highest probability in my mind, market goes lower today. Second probability, market goes sideways inside Friday's range. And least likely scenario, we make new all-time highs. So now there's nothing more to do but sit and wait for that opening bell and see where the market opens. Let's head over to the chat and see what people are saying. Good morning, Will. David G in the house. Griff is here. Debbie B. Thank you. Nap in the house. He says, remember to hit that like button, y'all. Yes, please do. Thumbs up really helped the Pirates' ego. So far, we got 23. We got 71 people hanging out, but only 23 likes. So if you can smash that thumbs up, I sure would appreciate it. 230 is here. Good morning to you. Arjit in the house. Bill is here. Frito. Greetings, y'all. Malang is here. Kids. Thank you. Chi Town. Appreciate you. Rip is here. Elsa in the house. Matt says, quick question. What's the difference between the heat map on the right and the footprint chart on the left? I'm new, so sorry if this is a stupid question. It's not a stupid question, Matt. That's what I'm here for. So the chart on the left isn't a footprint chart. It's a market profile chart. They're basically the same thing, but there are subtle differences. So, you know, I use the correct terminology just to not confuse people. But what the chart on the right is showing you, the book map, at least how I use it, the main purpose that I use it for is the heat map function. So the heat map function is basically the colors that you see on the chart. The ones over here on the right side of the screen, that's the current order book. So these are the orders that are sitting in the order book right now waiting to fill. If they're above price, they're you know, shorts waiting. If they're below price, they're longs that are waiting. Okay? And then what you see on the left part of that screen, that's where the liquidity was at that particular moment. So if I want to know where's the liquidity right now, I look over here on the right side of the screen. And then I also watch this left half to figure out how it's changing over time. As the market pushes higher, do they pull orders from above? As it pushes lower, do they pull orders from below? Do they add orders? This helps me understand sort of minute by minute the changes that are happening in the market, right? Most of the liquidity in the market, a majority of the liquidity in the ES and the NQ each day is actually computers. It's all algorithmic, okay? And these computers make decisions in a fraction of a second. Now, you can't really ever tell exactly what the computers are doing, but you can tell when they're changing their minds. When they've been doing one thing and suddenly they start doing another, or if you can kind of figure out what they're doing over time, that's what I use the order flow for, to see how those orders change second by second throughout the day. Okay? What I use the market profile for is to basically organize the information in a way that's very easy for me to see. So when you look at the market profile chart, these light blue sections, those are the overnight ranges. So that's basically from market close, 4 p.m. to market open the next morning at 9:30 a.m. Okay, New York time. And these purplish ranges, that's the regular trading hours. So from 9:30 to 4. So by organizing the information that way, I can see when did the market move, where it moved. Was it during the regular trading hours or was it during the overnight? Okay. And then by compressing all these letters, each one of these letters that you see is basically like a 30-minute candlestick. By compressing it all on top of each other, the way you see here, I can see where the market spent the most time. And then lastly, these little volume profiles that you see over here, that shows me where the market brought in the most volume. So for example, looking at this balance area, let's say the market opens today, it gets above that overnight high and it's finding support. I'm now saying to myself, story-wise, understanding what the market is doing, it is likely to go up, right? If it's going to go down today, it either needs to get resistance inside this overnight range, as we discussed, or a look above and fail of the overnight range that just pokes above and immediately pulls back down. That's the only way it's going down today, is one of those two things happening. So if I see it get above that overnight high and find support and bring in new buyers, guess what I think it's doing? It's going up. Okay, so now I want to enter a trade, right? I know where I want to get long. I want to get long somewhere around that overnight high. I know where I want to get stopped out down below. This will now become support in this scenario. That is not the case yet, but just for the sake of this scenario, that would become support. So I know where I want to put my entry. I know where I want to put my stop. So the next question is, where do I want to put my take profit, right? Where do I want to take profits on this trade? Well, now by using volume profile and seeing where the most volume traded in the past and using the time, I can start to see areas where I might be looking to take profits. So I use this chart to recognize changes as they're happening in real time throughout the day. And I use this chart to give me a three-dimensional look at the market to know where to put orders. Thank you, Jason. Appreciate you. DNK says, can we have a look at the NQ? Yes, let's do that. Let's queue it up. Ignore any old stuff you see written here. I haven't updated any of this yet from all last month. Okay. So just looking at the market profile, we can see that the NQ also in balance all last week. It does look like they made a good high on the all-time high, maybe just barely. Let's see here. No, they left a weak all-time high. Very interesting. So these markets are very tough to read, both of them right now. And I'm going to tell you why. Because both markets have a weak high. The ES has a weak high because it was created in the overnight and it was never retested by the regular trading hours. So that increases the odds that the momentum up, bigger picture. I'm not saying today, but over the next couple of months, the momentum up is not over. We will make new all-time highs. Okay. But at the same time, the ES has left behind multiple gaps to the downside, which tells us we need a pullback in price. So we're inside a balance area where anything could happen with a reason for the market to go up to make a new all-time high and a reason for the market to go down to fill the gap. And we're opening right at the base of the spike down. So the insights aren't clear just yet, but we will know, once we deal with this overnight range. Getting above the overnight high and finding support is bullish, getting below the overnight low and finding resistance is bearish. Okay. I would say the NQ is in exactly the same position because it reversed 3 times in a row at basically almost the exact same level. That is weak. Okay. That is a sign that the market wants to continue higher and make new all-time highs up there. There are traders who shorted in here who have their stops waiting up there. And those stops are liquidity for the market. And the market loves liquidity. But you know what else the NQ has? Multiple unfilled gaps below. So same as the ES, it has a reason to go up and make new all-time highs. It has a reason to go down and try to fill these gaps to the downside. And the only way we will know is how it ends up breaking out of this balance area. So let's zoom in a little bit on the NQ and see if it left behind a spike on Friday. It did. And the base of the spike on the NQ is 19,980. Okay. So exactly the same read as the ES this morning. Spike down. Exactly the same read as the ES. If the market opens here in about 2 minutes, which it looks like it will, below the base of that spike, below 980, that increases the odds the market wants to go lower today. That makes the probability of continuation lower much, much higher. Now, if it opens below there and it gets above the overnight high, we'll call that 20,019. Okay, if it gets above the overnight high, well, then that changes everything, right? It should stay inside this overnight range if it's going to continue lower. If it gets above that overnight high and it looks above and fails and pulls back in, bearish. If it looks above that overnight high and finds support, it's looking to head up and test, we'll call it 2,200. Okay, it's looking to test this resistance up here. So both markets, it is very, very important in 1 minute when the market opens, where it opens in relation to the spike. And then once it opens, what happens next, right? Do we get resistance and new selling inside the overnight ranges, or can they get above the overnight high? Both markets getting above the overnight high would be less bearish to see. Okay. And then staying above the overnight high would be a sign we're going sideways for the day. Now I'll say the exact same thing for the NQ that I said for the ES. My assumption is, because of the spike down on Friday, if we are going to go up, we're probably just going to go sideways inside Friday's range. However, because they left behind that weak high, they may be able to get above that high. Okay, so I wouldn't be looking to short up in here. I would be looking to take profits on longs and then watch what happens if we're able to get above Friday's high. So the markets are in balance, folks. We're going to have to be nimble. We're going to have to be like water, my friends. There we go. The market is open. So on the ES, we opened above the base of the spike down. That is less bearish to see. And on the NQ, we opened below it. That is more bearish to see. But both markets remain bearish as long as we stay below the overnight high. Good morning, Bernie. Welcome. Ships in the house. Good to see you. T. Craig is here. Jay, thank you. PSC. Oh, man, you're quick with the time differences. I felt creeped out for a second there. John, good morning to you. Truman in the house. Truman says, last week it was a week high and week low over and over again. Bots had 100% control of the market. That is a great insight. So if the market is going sideways like this, if it's balancing and we're getting tons of weakness on the highs and the lows again and again, that is a sign that the market is being artificially held in a range. We call that a pin, okay? When the market is pinned, it is generally because the options market doesn't want the market to make a big move. The bigger sellers of the options, it is most cost effective for them to keep the market in a tight range. So every attempt that the market makes to get away from the pin, it ends up getting pulled back again. So if that is the case, that would increase the odds of sideways today as well. But one step at a time. Let's see if we get resistance here inside the overnight range. Percy. Good, man. Thanks. Good morning, Cool Beans. Thank you, James. Appreciate you. If you guys have not yet, please smash that like button. We only got 100 people hanging out this morning. Those are rookie numbers. We got to get those numbers up. So if you could smash that like, I sure would appreciate it. Nap says we got numbers at 10. So we will keep an eye out for some volatility then. For those of you that are just joining the program, I am bearish as long as we remain below 55.41. My assumption is the market wants to go lower today. That is because of the spike down yesterday. If the market gets above 55.41 and it starts to spend time and bring in volume there, my second assumption for today is sideways inside Friday's range. And then only if we can get above, 65 and get new buyers up there, could I get bullish. So I'm bearish, first off, neutral, looking for sideways second off, and third case scenario, and least likely, continuation higher today. Let's see what happens. Right now, it's looking like a chop zone where they will chop it up. A chop zone. Did you guys miss my singing? I know you did. One punch. Appreciate you. I'll talk more about my my travels in the private stream. For now, let's just keep it market related. Cool Bean says, will we get access to the pirate feed automatically? Yes. You should have gotten an email this morning. If you didn't, just head to piratetraders.io /live and you'll get the link there. Everyone should have access once again. If you don't, if anything went wrong, just shoot me an email and I'll get it all sorted out this afternoon. Nap says you're officially in earworm status. So I heard you while you were away. That's perfect. So every time the market opened inside the previous day's range, you were automatically singing to yourself, it's a chop zone. Well, they will chop it up. John says, mine got messed up, I think. Yeah, just if you can't get access to the website, just shoot me an email. I will get it sorted out today. But everyone should be good. Okay, so for the regulars that are hanging out in the chat, I'm seeing an insight now that's telling me we are likely to go sideways for probably the first, half an hour or so of the day. Can anyone tell me what it is? What are we seeing that's giving us a feeling like this market doesn't want to go straight up or straight down right now? There's actually 2 or 3 signals, but what's the one you guys think I'm looking at? Good morning, Fly. Frito says tick. I haven't even looked at the tick chart because we're in balance. Yeah, the tick chart is finding support, but that's not what I was looking at. RP says pin to the overnight POC. That is an insight, but that's not what I was looking at. Mark got it. Boo, boo, boo. 10 points for Mark. Tempo. Right? We just spiked down at the end of the day yesterday. That is a sign of momentum. All right? That is a sign that buyers from last week were panicking at the end of the day on Friday. If the market was going to keep that momentum going this morning, the first thing we should have gotten was we should have opened below the base of the spike, which we did not. And the second thing we should have got is more panic this morning. More people unloading their positions and the market continuing to create that very fast move to the downside. So the fact that we opened above the spike, okay, and the fact that we've been open now for 10 minutes and the market's gone nowhere, it's just grinding right around the high volume and high time node of the overnight, tells us what happened over the weekend is still happening this morning. And that is just balance. Okay? So that is telling me we are probably going to chop for a little while here. They're going to keep getting people to go long at the lows and go short at the highs. And they're going to keep it going sideways until one of those sides breaks. And we may have to wait for those numbers in about 20 minutes for that to happen. So I am still bearish bigger picture as long as we're below the overnight high. But I suspect we're going sideways for a bit first. Griff said icebergs as a reason for the market to go sideways. That is actually a fair insight as well. That's not what I was looking at. But anytime you see icebergs of, similar size above and below the market like this, so long and short icebergs, that's a sign the market is pinned. That is being artificially controlled. So if it was being artificially controlled all last week to go sideways, and it's being artificially controlled this morning to go sideways, guess what it's probably going to keep doing? Go sideways. Gosh darn market makers. Reese says, how often do you stream? I stream every day. Monday to Friday. For the first hour of the day. If you're interested in hanging out, it only costs $10 per month. Head to piratetraders.io/join to join the party. Pay $10, check it out. If you don't like it, you can cancel anytime. If not, I'm always here for free on Mondays. Cool Bean says he took the month off with me. I hope I didn't influence that decision. But you know what was the funniest insight to me? I had no desire to trade or keep up with the market. Like you guys will remember before I took the break, I was like, I don't know. I'm an addict. I may still be trying to trade. Not at all. I didn't even think about the market. I was just busy living my life, and it was amazing. Okay, so now my analysis is telling me because we opened above the spike, because of the slow tempo and the tapering volume at the edges of the range, that the market is likely to flip and reverse here somewhere between 55.30 and 55.24. Okay, because I think we're just going to keep chopping sideways for a while. So now I'm going to click over real quick and I'm going to take a look at this chart that we call the tick chart. This is a market internal. So this just basically shows us buyers and sellers on the NYSE in real time, right? Are there more sellers or more buyers? When the tick is below the zero line, it's more sellers. When it's above, it's more buyers. So now as we're pushing into support, I'm looking to see, do we get a bounce in those ticks? Do they pop back above the zero line? If so, I know I'm right and we're going sideways. I am also from this point on going to start watching the halfback. So the halfback is constantly changing as the size of the range changes. It's basically just the very center of the range so far today. Okay, it's the middle. And often whenever the market is ready to stop going sideways, ready to stop chopping around and break out, it will first turn that level into support or resistance. So if the market comes down here into support, we get that bounce on the ticks, which we're getting right now, and then it comes back up into the halfback. I'll then be watching the halfback for resistance. Now, I wouldn't put a limit sell order in there. There's no, particular probability that it would hold as resistance, but if it does hold, I'd start to get bearish. But for now, I'm assuming more sideways. Let's go quickly take a look at the NQ. Okay, so the NQ is getting bearish here. The NQ held, let me just turn this off for a second. So the NQ held the base of the spike down. So remember we said the most bearish scenario for the NQ would be if it opened below the base of the spike and then it turned the overnight range into resistance. That is what it has done. The next step for it is to get below the previous day's low. It has just done that as well. So the NQ is officially bearish here, increasing the odds of continuation lower. The thing we'll be looking for confirmation of that is if they can turn either 19,909, which is Friday's low, which we're testing right now. If we can turn that into resistance, that increases the odds we're continuing lower. Or if they pop back up and turn the halfback into resistance, which is currently at 19,934, that is also a sign of continuation lower. Now, if it pops back up into, let me just delete that. If it pops back up into Friday's range and it doesn't turn the half back into resistance or the previous day's low, well, then it's more chop, more sideways, more grind. Okay? But any resistance now is bearish for continuation to the downside. And if the NQ takes a dive, the ES is likely to follow. All right, looking for support right here around 25 on the ES. This is an important moment. A bounce means more sideways. No bounce means a test of the overnight low. What's it going to be, market? Buying or new selling? You tell me. I'm also just going to quickly pop over and take a look at the Bookmap. So at this point, looking for changes in the heat map, right, will give me insights as to what might be happening in the market. So as the market was working its way up, they were adding liquidity up here. As the market is working its way lower now, they're beginning to pull the liquidity up here. That tells me that they do want to turn this into resistance and continuation lower. So now I'm keeping a very close eye on this halfback level for potential resistance. Okay, so for now, the market is staying inside the chop zone, but it is looking very bearish to me. So I'm looking for resistance at 55.30. If that holds, I will be looking for continuation lower. They are trying to break out of the chop zone on the ES, and all they need is one little push up to find some sellers, and maybe they can break out. Okay, so looking at the liquidity, they're trying to scare the market back up. They want to push back up into that halfback. They're adding more and more liquidity down here. So if we get another push lower, that will be very bearish to see. But they should be able to pop back up and test halfback. In this very slow grinding market. Reese says Tesla is making a run for it. Ooh, but it's probably going to run out of steam soon. So yeah, Tesla did just make a breakout last week of a range, and it is in excess right now. It does have momentum to the upside, but everything in context, right? If you're looking at Tesla and you're thinking, where are the shorter term buyers that stepped in during that balance? Where are they likely to take profits? Probably right here where we are now, right? Where are other sellers going to be waiting to start to short the stock? Probably right about where it is now. So this may be where the stock runs out of steam. Now, if it keeps going today and gets continuation tomorrow, well then, yeah, to the moon. But this would be a great place for it to flip and reverse and start coming back down. Looking at it on the daily time frame. I would say resistance at almost where it is right now, 207. We'll see what happens with that resistance. Frito says NVIDIA is weak. Yeah, NVIDIA don't look good. Same thing. Momentum. Tried to balance it off with time. Couldn't do it. Looked above and failed. Massive pullback and now just more balance. So I would say right now it looks like it's going to go sideways. But if you start to break 117, look for another pullback towards 109. We got some chop. We got some choppy chops in the markets. All right, here we go. Here's that test of the halfback. So from this point, if 55.30 holds as resistance, in my mind, that significantly increases the odds we're going to break out of this chop zone to the downside. If we don't get resistance, if it pops right back up through, more sideways, more chop, more grind. Okay, so we can see that the liquidity is going dark on the Bookmap. That is a sign that those bots, those day trading bots, are turning off. Anytime there's a big news announcement happening, which there will be at 10, the day trading bots generally turn off. They power down, which you can see as all the liquidity instantly disappears at the same time. That just shows you how much of the liquidity isn't real traders. It's just computers. All that just disappeared, that's computers. Okay? This is all that's real traders, what you see here. So now that the computers have powered down, the news bots can take over, and they will likely create a lot of volatility very quickly, which is what is happening as we speak. And then once the day trading bots step back in again, once we start to see that liquidity return to Bookmap, then we'll have better insights. For now, the market's saying more chop, more sideways, more grind. Jay says, manufacturing is a miss. John says, bad numbers, bad numbers. But you guys know what I'm going to say before I even say it. Who cares, right? Bad can be good. If people were expecting bad numbers and they shorted the market, all it's going to take is the market not going down and it'll reverse right back up to all-time highs. So let's pay attention to how we break out of this chop zone. That's the more important information. I truly hate when I have to do this, when I have to end. It seems like almost every time I do a live stream for Bookmap, at the moment I have to stop streaming, there's like nothing to tell you to carry forward. So here's what I will say. As of now, in my mind, this is more bearish than it is bullish, meaning there is a much higher probability the market wants to continue lower today than that it wants to go up. However, we still are inside the overnight range, inside the previous day's range, and we're in the middle of the chop zone. We have not yet turned the half back into support or resistance. So at this moment, it could break either way, pretty much 50-50. I would say 55% it breaks lower, 45% it breaks higher. So here's what I want you to do. Remember these two levels, the overnight low, which is at 55.21, okay? And the overnight high, which is at 55.41. If the market gets below the overnight low and it gets new selling, then we're looking for that momentum to the downside to continue today, okay? And we may start to really liquidate buyers down here if we get that momentum. Same thing if we get above the overnight high. If the market pokes above that overnight high and gets support, then you can look for that move to the upside to test the resistance in here, okay? But until one of those two things happens, until we either look above the overnight high and get support or look below the overnight low and get resistance, I'm afraid the more likely thing is a look above and fail that keeps going sideways or a look below and fail that keeps going sideways, okay? It's not very exciting, but that's what the market is giving us this morning. It's giving us sideways. It's giving us chop. It's giving us grind. It's trying to get as many people long as it can and then stop them out. Get as many people short as they can and then stop them out. And it will keep doing that as long as the market stays inside this overnight range. It's a chop zone and they are chopping it up. If you're a member of the Pirate Traders Brigade, head on over to the private stream. If you didn't get a link via email, you can head to piratetraders.io/live, and you'll find the link there. If you're not a member of the brigade, I say goodbye to you, and you should head on over to Bruce's stream and hang out with him. Thank you very much, and we will see you next Monday. Thanks, guys. Bye.